one of the things that you're hearing from corporate America and from the individual investor that we deal with on a daily basis is that we need a lot of this deregulation. We need tax reform. Everybody is for that. And I think that's going to be the catalyst that pushes us higher. It doesn't matter if he can get his full program through, but what we need to see is not another healthcare bill debacle. We need to see him come up with some plans for that tax reform. But then you also have to look at what's going on in the U.S. Consumer confidence is at its highest level since early 2000 in the dot-com bubble. The consumer's out there spending, and the U.S. economy is 70% based on our spending. And we're out there in full force right now, and a lot of the economic data is backing that up. The housing market's probably stable right here, but you're seeing economic growth rise up a little bit. You're seeing a little bit of inflation come into the market.
Yeah.
And that's for the consumer and for the American public. That's a bonus, and that's going to only help the U.S. equity market.
Okay, so here's the thing, Tom. We're about 230 now in the 10-year. You're looking for 3 by the end of the year. Does that mean you're optimistic about the U.S. economy, as you seem to be suggesting? Or does it mean you're also, on top of that, factoring in Trump being able to deliver on some of these reforms, including tax reform?
You know what? The way that I look at it is Trump is going to have his plan. If he gets at least half of it through, that's going to be a bonus for the U.S. economy. I'm not expecting him to get everything through because he's facing some headwinds there. But if you look at it, the corporate results that are coming through, we've got first quarter earnings starting in a couple weeks. The big banks are reporting, and those are going to be probably beating expectations. We expect that. The climate for business in the U.S. is becoming more business friendly, and that's only going to help the banks. They're holding huge amount of assets. Yeah, we didn't get that. After the rate hike in March, we didn't get that bump in the 10-year yield, the benchmark 10-year yield. But at the same time, it's pulled back a little bit. We've got this resistance about 2.3% on the 10-year yield. If we can hold that number, we've got Fed minutes tomorrow. That's going to be really important.